So, you're handling the books for your church. You've got the debits, the credits, the bank reconciliations. You're totally comfortable with all of that. But you might have noticed that when it comes to nonprofit accounting, there's a pretty big twist. Today, we're going to pull back the curtain on that twist. It's called fund accounting. We're going to break down what it is, how it works, and really why it's the absolute foundation of your church's financial health and integrity. All right, here's a quick look at where we're headed. We'll kick things off with why regular business accounting just doesn't cut it. Then we'll dig into the big mindset shift, stewardship over profit. After that, I'll show you a super simple bucket system that makes this whole thing click. We'll meet the different kinds of funds you'll be using, and we'll wrap up with the really important legal reasons this all matters so much. Okay, so first things first, why are we even talking about this? Why can't a church just use the same accounting system that works perfectly well for the coffee shop down the street? Well, that's because the entire goal is fundamentally different. And look, that is a totally fair question. All those skills you have in balancing the books, they are absolutely essential. But here's the thing. The story your numbers need to tell for a church it's a completely different story than for a for-profit business. The questions your reports have to answer are just not the same. And this, right here, is where it all clicks. It really boils down to this one single difference. For-profit accounting is always asking one question: are we making a profit? But fund accounting asks something else entirely. It asks, are we being accountable? See, the goal isn't to make money. The goal is to prove that we are being incredibly responsible with the money that people have trusted us with. And that word, accountability, it leads us straight to the most important mental shift you have to make. It's all about focusing on stewardship instead of profit. Honestly, this idea is the beating heart of all nonprofit finance. Think about it this way. A church isn't trying to make its shareholders rich, right? A church exists to use its resources, all those donations of time and talent and treasure, to actually achieve its mission. So it just makes sense that your financial system has to be designed to reflect that mission-driven purpose. At the end of the day, this is all about trust and being transparent. Stewardship means we can confidently show our donors that their money is being used for exactly what they intended. It means we have to track our money based on its designated purpose, instead of just throwing it all into one big pot and seeing what's left at the end of the year. So the big question is, how do we actually do that, right? How do you track money by its specific purpose without making things ridiculously complicated? Well, the answer is a really simple and honestly kind of elegant system that I love to call the bucket system. Okay, so here is the official super technical definition. It talks about a self-balancing set of accounts. I know, it sounds complicated, maybe a little intimidating, but I promise you, don't let the jargon scare you. The idea behind it is actually incredibly simple. Let's just boil it all down. Here's what it really means. Imagine that all of your church's money is sitting in one physical bank account. Now, your accounting software creates these separate digital buckets right inside that single account. So you've got one bucket for your general budget, a separate bucket for the building fund, another one for missions. You get the idea. Each one of these buckets, or funds, it basically acts like its own little mini business right there inside your books. It tracks its own money coming in, its own money going out, and what it has left. Now, this is an accounting separation, not a physical one, so you don't need a dozen different bank accounts. This is the system that makes sure a donation someone gave specifically for the new roof doesn't get accidentally spent on the hydro bill. It keeps designated money safe for its designated purpose. Simple as that. All right, so let's get practical. What do these buckets actually look like? What are the most common funds that you're going to be working with in a typical Canadian church? First up is the one you already know like the back of your hand, the general fund. This is your main operating bucket. It's where all the unrestricted donations go. The money people give without any specific strings attached. This is your flexible cash, the money you use to pay salaries, keep the lights on, and cover all those day-to-day costs of doing ministry. Next up, we've got externally restricted funds. This is when a donor gives a gift and says, hey, I want this money to be used only for this specific thing. Say the youth group's summer camp, a missions trip, or that new building project. The key word you have to remember here is obligation. Your church has a legal and an ethical duty to follow those donor instructions to the letter. Then there are internally restricted funds. Now, this time the restriction comes from inside the house. It's set by your own church board or leadership. A great example is the board deciding to designate or set aside some surplus cash for future building repairs. It's a really smart way to do financial planning. But here's the crucial difference. Because the board made the decision, the board can also vote to change its mind later. And the last major type is the endowment fund. You can think of this like a long-term legacy gift. A donor might give a large amount of money with one very specific rule. The original amount, the principal, has to be invested and can never be spent. Then the church can use the investment income, the earnings on that principal, to support its mission year after year after year. Okay, so we've covered the what and the how. Now let's land the plane with the most important part, the why. Why isn't this just a good idea, but an absolute non-negotiable? Well, this quote from the charity law experts at Bloomberg's makes it crystal clear. As a registered charity in Canada, the law is unambiguous. It says you can only spend funds according to your charitable purpose, the Income Tax Act, and this is the big one, any restrictions the donor puts on it. There's really no wiggle room there. So let's be really clear about this. Fund accounting isn't just good bookkeeping. It is the actual system that lets you fulfill your legal duty to your donors. It's the tool you use to prove to the Canada Revenue Agency that you're compliant. And honestly, getting this wrong, it doesn't just break trust. It can quite literally put your church's entire charitable status at risk. So I'll just leave you with this one question to mull over. Your financial reports, they are so much more than just numbers on a page. They really do tell a story. And the question is your accounting telling the true story of your church's integrity, its faithfulness, and its incredible stewardship of every gift it's been given to fulfill its mission? Something to think about. Thanks so much for watching.